Goldman Sachs is just out. First quarter earnings coming in $6.95 a share. Trading revenue for equities, let's take a look at that, coming in at $2.3 billion, slamming through estimates. Investment banking revenue overall coming in much higher than estimates as well at $1.79 there. I'm still waiting for FICC to come out, but earnings coming in at $6.95 a share and blowing past estimates in equities as well as investment banking. But that's interesting because the majority of the banks missed on investment banking, and that was a lot weaker. So it's interesting that Goldman was able to hold the line there. We're still waiting for that FICC revenue to come out, David.
But they are increasing their quarterly dividend, which will get reflected, I expect, in the price of the stock, right? And it looks like the stock, we got an intraday sort of up 1.9%, something like that. Yeah,
so it's right around the highs of the session. What do you make of that investment bank number, Alison?
Well, actually, I'm looking at the FICC number, which came in at $2.1 billion, so 23% growth.
Just about on
So just about in line with expectations. Keep in mind the other banks missed expectation, and you're getting 23% growth off a weak comp, whereas the other banks came in sort of flat to modestly below. A stronger quarter for the other banks. Yeah. Equities trading also coming in better than expected, and a new format for the release this quarter. So,
and also the FICC number is really impressive because it basically doubles what they did in the fourth quarter. I mean, the fourth quarter was $1 billion, so this is more than doubling. That's
correct. And we have seen strength sort of across the companies. That is the volatility that we've been talking about.
But not in FICC.
Different areas.
Everyone else has missed on FICC, haven't they? All the big banks.
Everyone else has missed on FICC. And again, I think you have to keep in mind the mix. So Bank of America, where I think we got the biggest miss, sort of the weakest result. They have more exposure to the credit business. That was sort of a weak spot this quarter. Alternatively, commodities, as we just discussed, a strength for Goldman Sachs. And we did see estimates for Goldman actually rising into the quarter. So perhaps some expectations going in. That was before the peer reports. And with what we've heard from companies so far, equity trading jumped. So we've seen that again. That's the volatility that we've talked about so far. We are going to want to hear about investment banking and what they're hearing from clients, what they're seeing in the pipelines. Banking fees are something that's hurt by higher volatility. So we've seen sort of weakness across the banks, and we're going to want to hear what they have to say about pipelines and the backlog. We have heard positive comments again from JP Morgan, Bank of America, and Citi in terms of things looking good. Of course, the caveat is as long as the environment remains constructive.
I can almost hear Lloyd Blankfein being like, I told you guys. I told you it was cyclical and not structural. You just didn't believe me. I just want to reiterate these numbers because they're big. You have FICC revenue coming in at $2.07 billion, doubling sequentially, blowing past estimates. Equities also coming in $2.3 billion, and investment banking almost at $1.8 billion. All of them blowing past estimates. But David, what's so interesting is the stock is rolling over off its highs. It was up almost 2%, and now we're up by just 0.3%. And their overall trading revenue also blowing past estimates. No surprise, $4.4 billion.
It's fascinating because I don't see one thing that they've missed on. I mean, their overall trading, just total equities and FICC, is $4.4 billion as opposed to $3.9 billion estimated.
And they actually did have some pretty good growth in the equity and debt underwriting fees, which is not something that we've seen at the other banks. M&A down year over year, but keep in mind we've seen a lot of activity in announcements, so that bodes well for next quarter. But some of the, I think, slowdown and stalling activity that we saw in the fourth quarter feeding through to fees in 1Q.